Hope everybody had a really great long weekend. No, I did. Actually got a lot accomplished. It was actually quite, did do absolutely anything yesterday though. And markets, they've been slipping since last night. Not a big deal, but nonetheless, they have been a little weak. You got the Russell down 14. You got the Nasdaq down about 193. ES down about 30 handles. Also got natural gas actually pulled back, but now is a little bit moving up a little bit to the upside. Crude under pressure all night. Big gap down all night. Pretty much sitting right on S3 here. Look at this. This is pretty wild here. Literally just bouncing right off S3. So anybody who tells you that these pivots don't mean anything, they really, really don't know what the hell they're talking about. And again, they're not the end all, but they at least give you, they at least give you some semblance of support, and put some lines in the sand of what, if you should trade or not, right? Whether or not you're successful, it's really a matter of pulling the trigger. Let's face it. And I don't know why in the hell my time zone keeps getting messed up. Okay, there it is. Other markets pretty much flat. You get gold is flat. The dollar under a little bit of pressure, kind of pulling back a little bit here. The VIX are getting a little love. I think the story overall too is I was looking too over the weekend at bonds. Bonds are absolutely amazing here. Look at this run that we've had in the last couple weeks. It's been nothing short of just miraculous. Absolutely incredible run here in bonds. Literally running this trend line to a T. And you could even, if you really want to wonk the hell out, you could literally do this as well and run a channel in here. And it's been running a channel. That sounds pretty pornographic, but nonetheless, it's been running this channel here pretty cleanly. I mean, look at that. I mean, you can't really beat that. As far as being a chart painter, you can have a ball with it. Isn't that fun? So really, that's kind of what's been going on. And then I think probably one of the most underreported things going on right now, and I am actually short, is EWZ, which is what's going on over in Brazil. Now, I don't know how true some of these reports are. I'm seeing things out of the secondary news services. I'm not really finding anything on the mainstream, I should say, which doesn't surprise me, but a lot of talk now here about how the military now is behind Bolsonaro and saying that there was election fraud and blah, 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 and that they're going to enact some article, whatever, blah, blah, blah. Needless to say, this ETF has been under pressure since the election. And I kind of sensed it when things kind of went south over there. That just didn't seem right. Now, I don't know anything about Brazilian politics other than what has been fed down my throat from the Western media here up in, I'm sure it's just as corrupt down there as it is here. It's all about money and power. But I kind of seen it on the horizon, and I'm continue to be short here. And I think this is going to be a good ETF to continue short. I'm really looking for this thing to get back down to about 25. Now, whether or not this is a good time to reload or not, it's definitely not going to be a sign of stability that, the military, if it indeed happens, I don't know if it's going to happen. If it indeed happens, and the military has to step in, it's going to make things quite a mess down there. And it's been kind of messy, right? It's been since the elections over there. It's been kind of down, and for the most part, it was on the rise. They were actually making a pretty good comeback, and it was actually showing some strength. So I continue to be short and on this, and I'm just going to bring up Tastyworks and look at some options here. And I did put together a little agenda here. I was actually working this weekend. And so I'm going to go over some possible shorts. Now, these are not for any type of reasons like RSI, any of the reasons that you think that anybody else would be, it's nothing, it's not technical, it's not this or it's that. Because if you look at any of these on the charts, and let's just look at them on the charts real quick, and let's bring up the ETFs here. You look at the XLI, the IYR, the XOP, these things have actually been killing it of late. The XLI, quite amazingly, industrials very strong during a so-called slowdown, right? Just pretty miraculous. Now, has it come back to where it once was? No, but for the most part, it really hasn't fell off a cliff either. And you would expect, with things slowing down and you're seeing things like consumer discretionary and everything else, reality is that industrial type companies can't continue to keep doing well as long as the consumer side of the economy is beginning to suffer. So again, I don't know how to interpret it. I really don't know what's going on right now. Everything in the market right now just seems upside down to me. I would have expected to see these kind of hitting the skids, but they're not. They've been very strong, and that's kind of why I think it's worth stepping in short here, just because, again, what's the catalyst? Ultimately, industrial production needs to lead to consumer demand. It's just what it is. It's just the way all these economies work. You just can't have industrial production and not have any consumer demand at all. It just doesn't work that way unless it's just the government's blowing money on infrastructure. That doesn't last forever either. So anyway, needless to say, I think this is a good short, XLI, just based on market price and market and current fundamentals of what's going on. So there's the XLI. And full disclosure too, out of all of these are not very liquid ETFs, unfortunately. Is it the I think I might have the wrong. I thought it was the IYR. Why is it coming up as futures? Yeah. The IYR is the real estate ETF. Of late, it actually has moved up. This is another area of the economy that I'm just kind of waiting for this to roll over and blow its brains out. So there's that, which is the IYR. And also the XOP. Now, the XOP has just been an absolute monster this year. I think overall it probably is the best performing ETF this year. Again, I don't know. I don't usually rank them, but I would have to believe it's up there. It's got to be in the top 5 if it's not anything. And again, this is just another one where you have this thing at an extreme. And at some point, they're going to ring the register on these, right? And reel it in. Now, whether it happens sooner or later, I didn't know. So anyway, so those are some possible shorts: the XLI, the IYR, and the XOP. Now, if we go over into and look at some of the options, this is where it gets dicey because these things really are not very liquid. Let's just look at the liquidity rating on this. It only gets a 3-star liquidity. Generally, mostly the liquidity in here is actually downright horrible at most times. So I'm not going to question that. Good open interest, right? Can't really argue with the amount of open interest, but then look at some of the spreads in here across these option contracts, and you just start shaking your head like, oof. It makes it real hard, and I'm trying to get my pen tool. It makes it real hard to, and we'll just switch over so that we're full screen. It makes it real hard to trade these and really do anything the way I like to normally do it, which would be with some kind of, here, what I would be looking at first and foremost would something be around the 105, right? I always talk about that 70 delta option that if I'm looking to be directional, I like to be in the 70s, like, and go in the money. So I would be looking for an in the money put spread. This is out in January 20th. I'd be looking at about a 105 as a 71 delta, but look at the spread here. I mean, it's a $1.10, right? 445 to 555. You could drive a truck through there, and that is just awful for trading. It's terrible. Now, you'll make it up on the spread. If you're doing a spread, you'll make it up on the other side to a degree where it won't be as painful. But even still, to me, that's just god awful, criminal. I mean, so I would actually wait. I guess my point is I would wait to see if these things tighten up a little bit. And if you did decide to do something, I mean, even a $5 wide is going to be rough in here because it's going to cost you money because the spreads suck. The spreads suck. But something like this isn't so bad. A dollar wide spread for a little nickel and dime trade, a 105, 104. It's a 50-50 shot. You got a 68% probability of profit. You're basically, I mean, it's showing the -5 delta, which is probably about right. Again, not a theta move here. This is purely directional, and then you'd be really looking for this XLI basically to pull back to about $90, $95 to $92, maybe $90 on a good day, and make yourself a little bit of money. And so that's all I'm really looking to do in the XLI, and then. Real simple one there. I'm not even going to write that one up because it's so simple, but it's just a little simple 105, 104. You want to take on more risk, just widen the strikes. That's it. 105, 103. You can get yourself short. You got 53 days on that one, and you pretty much got a 50-50 shot. I mean, let's face it, that's really what you got. And then we go into the IYR, and I think you're going to get into another one that's not really liquid. Again, 3-star liquidity, not real good. This one happens to have weeklies, which isn't bad, which usually is better at least. But again, open interest isn't through the roof. But the one thing that's nice about this is the spreads are a little bit better. They're a little bit better. They're not much better, but they're a little bit better because here's the 70 delta here, is 72 delta. 94 option in the money, and it's about 60 cents. So it's not as bad as the XLI. And this is the real estate ETF. And so if I was going to get short here, I'd be doing something very similar. Again, these are not volatility plays because look at the RVR, and the RVR on the XLI was only like in the 20s. So you really can't sell anything in here. You kind of have to be directional. You got no choice. And again, just another small little put spread to me is just another nice small little way to just get short some of these names. Right. And that's kind of how I would play it. Now, it's not going to be cheap because as you can see, right, with this one, $85 will bring you $15. I don't know if that's really very reasonable or not. You're probably going to have to come down more. With this one, you're probably going to need to come down closer to the money and maybe even drift a little bit out of the money here to make it even worth your while. The 30 looks pretty good to me, the 30 delta. 84, 83, $20 might yield you 70, 30% probability of profit. Again, you're looking for this thing to get back down to about 85. I don't know, 85, $84 gets back to your high strike there. You might make a few bucks. Yeah, not crazy trades here. Here's the XOP. Same sort of thing. Liquidity in here it's spotty at best. Again, 3-star liquidity. There's times when this thing's really liquid, and there's other times when it's real illiquid. And again, this is another one I have to say that I know the spreads have generally been bad, but they do tighten up. I have seen these tighten up during market hours. IV in here is a little bit higher than the others, so you could, if you wanted to, you could sell a little premium in here if you're really feeling the burn. One trade may not be bad is the 135. Now the thing about it is I just did the 135 put and it's already showing a $1,300 buying power hit. I don't know if I really like that. I mean, that's pretty stiff, but you're getting paid. I mean, that's about 1/3. That is about 1/3 of the buying power. So, I mean, again, so this is one where since volatility is a little bit higher in here, you can actually do sort of a spread. So I want to take my positions out so it doesn't skew the curve. This is what this one looks like. So you've got a landing zone from about 130 to about 185. Not too shabby. It's the little skewed delta positive. You can see here at 1097. Decent theta in there. That's not that bad. Wish it would be a little bit better, but the fact that we're out 53 days. And that one's not too bad. The other trade that I do like in here, now that I'm looking at volatility, is if we did the call ratio, kind of fits in here. Now, problem again with this ETF is buying power. Look at the buying power on here, $2,900. So if you're going to do something that's not risk defined, it's actually cheaper to do the strangle. Quite honestly, it's much cheaper to do the strangle. But yeah, I don't know if I really. Excuse me. I don't really know if I don't know if I really want to use $1,600. Let's face it. I don't think I want to use $1,600 for a trade like this. But then again, you know, if you have the buying power available, this is actually a really powerful trade here, especially if we could do it for like $1.85. You got a 91% probability of profit. It's skewed delta negative 13. You got about 4 theta. Max profit 685. You're not making 685 on this, not even on a good day. Again, unless it pins perfectly at your strike when you do this. Unless it pins completely perfect at 175 at expiration, you see that, that's when you're going to make it, but you're not making that. So nice thing about this is you have upside all the way to about 182. Upside risk to 182, zero downside. And again, issue here is buying power sucks. So in my opinion, it's probably better to do a strangle. And I like that 135. It's the 135, 180 strangle for 585. Now I know it uses, again, $1,500 worth of buying power, but relatively speaking, and if you look at the statistics on this, they're actually really, really good for that $1,500 buying power. It's almost a 76 probability of profit, 82% probability to make 50% max profit. So to me, that is a really nice trade here. So you're kind of having mixing little bit of two worlds here, a little bit of a volatility play, and then you're actually you are skewed a little bullish on this, even though the delta is positive. But I'm not so sure it's actually a bullish trade, even though it is showing a delta positive. To me, this is a fairly neutral trade in here. Playing on this, kind of having one of two things, kind of volatility collapsing a little bit, and maybe this thing just kind of not going anywhere. All right, and so I mean, so not technically a short trade. If you really want the pure short trade, the ratio that I just showed you is going to be the true short trade. So anyway, that's kind of it as far as short trades. XLI, right? IYR and XOP asterisks, so to speak. All right, so now let's talk about high IV. Right now, if we look at some of the high IV stuff, UNG natural gas is still up there as far as volatility. CRM, I just talked about EWZ. That's also relatively high from an IVR standpoint. The UUP, which is the US dollar ETF, Nike and DocuSign. Now, a couple of these have gone over at nauseum. Now, I'm not going to cover natural gas because you know my opinion on natural gas. Right now, if you just looked at UNG, IB rank is just through the roof here, right? It's actually expanded much, much more than it was just Friday. I think Friday was in the 80s. Now it's a 101. So it's expanded again. CRM. Now, CRM has earnings. I believe on, when are their earnings? I believe it's this week. If I'm not mistaken, where is Salesforce? Salesforce. Pretty sure. Wednesday. So Wednesday is CRM. So we're not going to even talk about, but CRM high IB rank here. So it is on the list. We talked about the EWZ. I'm already short EWZ. I don't really want to do anything more here. The nice thing about EWZ, though, is, and I may actually need to put on another trade just from a volatility point of view here. I think if you do like the one standard deviation strangle, or damn near close to it, no buying power at all. And the one standard deviation strangle is only going to run you $253. All right. And elevated volatility. So not a bad trade. So I'm just throwing that one out there as well, because you kind of have a little bit of two things going on here, a little directional and a little. Now, UUP, I didn't look at anything at all as far as options. Now, in full disclosure, I'm short some UUP puts, or actually long puts. What am I in? UUP. It's actually one of my biggest positions. I'm long 529 puts. You can see it's one of the best positions I have. Look at the pin on this XHB though, right? There's no way. Now I've trade price on this. If you look at my trades here, my trade prices, I don't think I've paid more than $40. How in the hell am I down 300? What a nutty pin. That's just a crazy pin at the end of the night on the options themselves. So anyway, there's full disclosure on that. On UUP. But the thing about UUP is it also came up in the high IV trades list here. And so what I'd be looking to do here in the UUP, and I haven't looked at it, it's very liquid. There's no question about it. I'm not sure there's any real, I mean, it shows that there possibly is some juice in here, but looking at this, I just do not see how, and it is a bullish trust. I don't know how you could do anything from a volatility point of view in here other than be directional. And that's it. So it kind of came up on the list, and there we go. And after further review, a big fat nothing. I mean, again, you could do you could do a spread. You could just buy options if you want. If you think the dollar is going to go which way, it's a bullish trust, right? So it bets on it going up. The dollar going up. So if you are short this, you want the dollar to go down. And since it is just one of these skewed things, it's not like a 1-for-1. The momentum to the downside, hence, would probably be, I would believe, would be stronger on this than to the upside because it is skewed bullish. Again, that's just my opinion. So, and being where that the dollar has actually been kind of selling off a little bit, I don't know. I don't think there's anything to do here. So anyway, Nike, NKE. Another one on the high IV list. Problem here is you kind of got a couple things going on. Earnings coming out next month in December. But more importantly, the problem with Nike is that although volatility is relatively high and it comes up on the list, this stock sucks because margins are not that bad. I'm actually a little surprised. Just selling a 90 put is $900 worth of buying power. That's not as bad as I would have expected. A problem here is that I don't know if you really want to do anything in Nike pre-earnings since it's a couple of weeks out. you could actually get a volatility expansion in here, and this a position like this, which is pretty decent position here. It's about 1/3, 365, 70% probability of profit. This is what it looks like on the curve. The 90-120 strangle, not a bad trade, but I don't know if you'd want to get into this because you run the risk of this volatility expanding over the next couple of weeks with earnings coming up. So to me, you're probably better off sitting on the sidelines. So hard pass on Nike. We'll wait for earnings. Now, DocuSign, this is one they just have absolutely, I don't even want to look at the chart on this because they have just absolutely punished the living piss out of this. But high IV rank, they do have earnings coming up, I do believe. Yeah, first week in December. So this is another one that even though it's high on the IVR list, you're probably going to want to wait to do something in here. Margins usually are not completely horrible in here. They are a bit high, I guess, to sell a 35 put and run you $900. That's a little stiff for a $45 stock. But there's the one standard deviation strangle right there in DocuSign. Not a bad looking trade. You're going to use $900 worth of buying power, probably 70%. Basically flat delta, about 3 deltas, but that's hardly anything. And not even bad theta. I wish it was better, actually. But again, low theta because we're out 53 days. And that's the Januaries. So anyway, again, DocuSign probably going to be a hard pass right now because earnings are coming up in a couple of weeks. And I would rather play it as an earnings trade as opposed to just a trade. Now, if none of these had earnings, Nike or DocuSign, I'd be all over them, honestly. So anyway, right now, as far as earnings, not much going on tonight. I'm not touching any of these. AZAC, although I love AZAC, use it all the time. And then tomorrow morning, Billy, I don't know. This one's been kind of a piece of crap. They have just absolutely destroyed this thing from its glory days. All right, there's not really much volatility. I mean, 44 in here. I don't know if there's anything you can do. At a $12 stock, maybe you sell some. December's got 18 days. Maybe I don't know, it's sitting at 12. Maybe you sell a 10 put. Margins are good. I don't really see anything else you can do in here. Maybe you do a covered call. What's the covered? Let's see if you did the 12 or 13. The 13 covered call in December is not a bad trade. It only costs you $500 of margin. Your cost base is $11.15. Worst case scenario is, right, it gets whacked and your cost base is $11.15. You can roll that 13 down and bring in a little bit more premium and not really use much capital. I actually like the covered call better. Covered call is the way to go in Billy. And as far as the other ones, I'm not even going to look at them because they all look like they suck. Tomorrow night might not be bad. CrowdStrike, that's an interesting one. We'll take a look at Intuit. That's never normally a good earnings trade. That usually sucks too. But Billy. Yeah. So anyway, that one, and then we'll talk about the other ones tomorrow, everything else. And then really the good ones, we've got a lot of retail, a bigger retail, Five Below, which should be interesting. Dollar General, Kroger, Big Lots, right? Hearing all this. Look, anybody who's out in the stores or talking to anybody who's been out in the stores are effing dead. They were dead. I don't care where you were. Maybe there was 5 stores in the whole country maybe that were actually busy. They were absolutely dead, but then they said they made an announcement yesterday. I've seen it. Internet sales were up, hit a record 9 billion, 2.7% higher than last year. Well, put that in perspective. And I actually sat on the couch and explained all this. And I was like, it's amazing how they create this headline. And it says that we did $9.1 billion in a record. Wow, right? 2.8% higher than last year. So let's write this one up. This is just interesting. So you had, 9.2 billion was the headline, right? And it was a record, right? It was a record, and they made sure they made that the headline. Record sales. Internet sales, right? Not direct sales, internet sales. And that they were 2.8% higher year over percent higher year over year. Okay, now they're starting to rip the narrative out that was this such a good thing. What was the inflation rate? What's the inflation rate right now? What's the inflation rate? Well, the reported inflation rate is about 7.9%. And I probably am wrong. I don't follow it because I think the actual reported inflation rate is a crock of shit. In fact, I think anything reported from the government is a crock of shit. They're lying. Even the unemployment rate, I don't think the real unemployment rate is 3, whatever. It hasn't been the real unemployment rate for about 25 years. It's been a bullshit statistics. But anyway, needless to say, let's just say that, okay, it's 7.9%. Well, if everything is 7.9% higher than it was just a year ago, and sales only increased 2.8%, how is that a record? Now, right, it's not. It's not, right? Now, if inflation was 2.8% year over year, and sales increased by 2.8%, right, basically flat. So you see what they did with this headline is they try to make it seem like, this is a bad number. The fact that they're only up 2.8%, inflation's at 7.9%, that means the cost of everything that they sold. Now, these are sales. This is not revenue. These are sales. So that's why sales are higher, is because prices are higher. Right? And then the last bottom of the headline, I should actually bring it up. I don't know if it's still on there. In fact, I think I have it. Hold on a second. I'm going to bring it up. Let me bring it up. Anyway, when you start drilling down into it, here it is right here. There it is right here. Right? Black Friday on the 9 billion new record, right? Consumer spend record, whatever, right? It was pretty close, right? A 2.3. So I actually gave him a little bit of benefit of the doubt, right? So we talked about inflation. So that's really not that impressive, which means that actually sales were actually down year over year, inflation adjusted. And then here is the kicker. Buy now, pay later payments increased 78%. 78%. It's insane. So people are freaking buying stuff on this, like with Affirm, and like I bought stuff with Affirm, but there's all these agencies and these credit bureaus now handing out money on pay now, buy now, pay later basis, and they still couldn't beat the rate of inflation. So to me, is this a good thing? No, I don't think it is. I don't think it's good at all. In fact, I think this headline is very misleading. It's very misleading. So anyway, I just thought I'd point that out, that, I seen that, and that was kind of another thing I was looking at, is possibly like maybe Walmart might be worth, it's been running pretty good. Maybe Walmart's worth a short here. Target, they announced their earnings and they said they suck, right? I mean, some of these bigger retails, Kohl's, KSS. Now they have earnings this week. That's going to be really interesting. Big Lots is another one. They got their earnings this week. That's going to be interesting. So I don't know how much shorter you can get on these. Dollar General. They announced their earnings this week. Now, their earnings, they actually may do okay because what's going to happen, right, is people are not going to shop at Target or, the bigger retail, more expensive Macy's, that type of shit. They're going to go to Dollar Tree. I don't think anybody stopped going to Dollar Tree, but this stock has actually been doing really well. So anyway, I don't know. You interpret it any way you want, but I just thought that was really interesting. And I also thought that it was really a real deceiving headline that, there shouldn't have been just broadcast like, oh, record sales, right? Yeah, I mean, come on. I just hope people are not that stupid. Anyway, that was really it. That's really all I had. I don't really got much of anything else. I think we're in for just a choppy, sloppy mess from now till probably sometime in March. And I'm just going to take it one day at a time. As I said, you might want to look at some of those if you're interested. Some of these shorts, XLI, XIYR, and XOP. Also, you had the few volatility plays, but they all have earnings, so really can't do anything with those. And then that is about it. So anyway, have a good one. Trade them tight, and I will be